Everyone always says, "Oh, if I bought Bitcoin at $100, I would have held till today." Like, fuck, you would have. Like, nobody would have. Like, a few dieharders that truly, truly believed in the tech did. The rest of you you'd have taken a 20x and walked away and thought you were a fucking genius. You took 16K to 9 mil. It's cash out. And guys like, "No, man, we're gonna run this up." Amazon was the place you fenced stolen retail goods. I think late last year there was a story of a woman who had a Sephora theft ring operating out of 3 states, and over 2 years she had sold $7 million worth of inventory on Amazon.
What's up, guys? Welcome back to another episode of the Side Hustle Experiment podcast. Today we have Darren. He's a 6-figure Amazon seller. We're going to be talking about Amazon, maybe a little crypto, and just shoot the shit in general. Thanks for being here, man.
Thanks for having me, guys.
Yeah, so give us a little intro of how you got into all this stuff and what you do now.
So I think I've been doing Amazon. This is the start of my 4th year in May. Before that, I did a bunch of stuff. I ran a digital marketing agency for like 11 years, went off and traded crypto for a couple of years, got back into some digital marketing consulting, remembered why I left it in the first place, and then got into Amazon because I was looking for something different that would be interesting and enjoyable to do for the most part.
Sweet. And if you still sell a decent amount, I guess 6 figures. Yeah. What are you like currently doing monthly on Amazon?
This last month, combined on Amazon and Walmart, was about 65. Had some issues beginning of last year with counterfeit claims on inventory I couldn't beat, so I ended up losing healthy 5 figures worth of inventory that Amazon disposed of. So I kind of got into a bit of a cash crunch because that was bought with one of those god awful Amazon loans that charges you back 10% a month. So kind of had to like get that resolved and then kind of clean things up and kind of rebuild a little bit here the past year.
How do you feel about Amazon overall with that kind of stuff, like the claims and things like that? I know you probably have heard us. We're kind of negative on it, but
I think you got to be a bit wary. Obviously, you always imagine that's never going to happen to me, and then it does. So you got to understand that there are some pretty serious risks, especially when you're leveraging debt to buy inventory. I think overall, most people are probably safe, depending on where you're buying your inventory from. But with the recent regates and stuff like that, it is a little concerning about the longevity and the safety of what's happening as kind of like a generic resale as opposed to somebody who has a brand partner.
John.
Yeah, what happened with the counterfeit? Like, kind of some people don't know the process of what happens, and kind of what was your back and forth with them, and kind of what was the outcome?
Yeah, it was counterfeit without a test buy on a whole bunch of products on a brand, and they essentially wouldn't accept the invoice from my supplier, which had worked before on some similar issues with different brands, but for this one at the time they weren't taking it. Had a lawyer at the time. They went to bat for it, and yeah, couldn't beat it. And Amazon's inevitable outcome for those claims is to dispose of your inventory and take it and they torch it. You never get it back. So it ends up being a complete loss. And obviously, I'm not the only person that's ever happened to. That one was a bit of a kick in the teeth.
Yeah, I don't think a lot of people know that if you get the counterfeit thing, they're not allowed legally to ship it back to you if they believe it's counterfeit, because it's illegal to ship counterfeit goods. Yep. Yeah, I don't really hear people talk about that much, because sometimes you can get claims for different stuff, but the counterfeit one's really bad because then your inventory is literally nuked. You don't even get to resell on eBay or try to. So how much was it, if you don't mind saying?
Close to 50K worth of inventory. Yeah.
Damn, dude.
Yeah, I went aggressive. The brand was selling well. Supplier invoices had worked in the past for ungating for other counterfeit claims. So needless to say, obviously I no longer use that supplier. It was just somebody I met at ASD a few years back. And yeah, so yeah, they torched that much inventory, and obviously when you're kind of expecting that cash flow to help offset the Amazon loan, you end up in a bit of a um, cash flow crunch, and kind of to a certain degree, a bit of a death spiral as like your outbound overtakes your inbound, and you kind of had to wait to get through like the entire loan payoff to almost reset and not have that negative cash pressure on the business.
Yeah, I'm curious how that didn't like deter you or make you like want to quit there, or do you still like consider that kind of stuff, or is it how have you persevered through that? Because I think a lot of people get taken out by that kind of stuff, but it sounds like you pushed through it.
Um, I just sat down and I ran some numbers, and I figured I could still like I'd rack up a bit of debt, but I could like get through it, and then I could start turning it around. And I had some other like side projects going on to help make things go. I still felt like, you know, overall, Amazon is still if you know what you're doing, it's still a profitable enterprise. It was like obviously it was a tough lesson to learn, um, but you know, mistakes happen in any business. I made some pretty big ones back when I ran an agency that not close to this in a couple of cases, but everything else was running pretty good. Outside of that, um, you know, it was pretty profitable. So I wasn't just gonna let like one issue with one brand from one supplier like knock everything out. It just kind of was just a bit of a nasty setback, really.
Yeah. Talk a bit more about the marketing agency, correct?
Yes.
Yeah, kind of like how we're trying to move the direction of this pod is to talk about different businesses aside from Amazon a lot of
hmm
times. So I think that's cool if you give your perspective on that and why you didn't like it, and then kind of like what all that entailed.
Yeah. So I started that 2 years out of college after I got let go. I was working for a small local internet service provider that did fiber optic stuff for medical facilities. I got let go, and I was looking for some work to do. My dad at the time was a business coach, um, and he was looking to help his clients generate more business, more leads. So this would have been 2007, 2008, like kind of early days of internet marketing. I mean, my biggest competitor at the time was basically the physical yellow pages, right? Was like that's how most people would find a lot of the businesses I worked with. So started doing it for his clients. This is kind of back when I first started, there were no call tracking companies at all. Like you couldn't get call tracking phone numbers, which is obviously standard in um, lead gen or any sort of marketing based business that has performance metrics. Like nobody does anything for anybody without tracking and recording phone calls to show inbound leads from various sources. But I mean, at the time there were no providers for that. We could just do kind of form completions at the time, for like the first 2 or 3 years, and then a couple of like relatively okay phone call tracking providers started popping up, and it was kind of bare bones. It's like nowadays you get fun things like dynamic phone number insertion. Depending on the source of the traffic, the phone number changes automatically from a pool of numbers, so you know exactly where it comes from. Back then you could hard code a single number depending on the source, or you pay somebody to write really heavy code to change like permanent numbers depending on the source. So really working with local service-based companies, kind of your classic Yellow Pages types of businesses, home remodelers, cleaners, roofers, HVAC guys, that kind of thing. Up to working on SEO, Google My Business optimization, and then paid advertising through Google Ads, still AdWords back then. Um, Primary focus being inbound lead generation for the businesses.
Did it work? Did it work well? Like, did you grow
Yeah,
any
I mean it
companies?
was a seven-figure agency with really healthy margins. I mean, outside of salaries, clearing 200 and something $1,000 plus profit on the business. I just got burnt out doing it. Issue we did was our price point was a little bit low, and that was carry over from when we started to a certain degree. Nowadays it's not hard to convince people the importance of a website and inbound lead generation. Back then you had to pitch it. Like, why should I pay you instead of paying Yellow Pages? Like, that was what we had to do. So you couldn't come in high. Nowadays, you work with, like, say, a high-end kitchen remodeler, you can easily charge him $5,000 to $10,000 a month for inbound lead generation, because he's going to pull six-figure remodels, and it makes it worthwhile. People now understand the value of that, but this is 17, 16 years ago. That didn't exist. It was a kind of like a brand new thing, and so our pricing point was a little bit low, and we didn't really increase that as aggressively as we should have. So it ended up being just like a lot of clients to work with, and I just kind of got burnt out on dealing with, like, a lot of small business owners that didn't really understand the value of what they were getting.
Yeah, that makes sense.
Interesting. When you were kind of getting burnt out with it, did you have help, or did you try to outsource it, or?
We had a company. We had 7 full-time employees, like, locally, and then we essentially owned a design firm in Macedonia that does all our web development. It is basically essentially a subsidiary of ours. Essentially, a startup went from like 2 guys to, I think he's a team of like 13 now. So the company's still up and running. My dad runs it, and I still own part of it. I just not involved in the day-to-day operations anymore, and haven't been for a number of years.
You said you got back into it after a time, right?
Yeah, I started doing kind of some higher end consulting. So you want me to come and do like your digital marketing for you. Um, it was like, either 3 to 6 month commitments, um, anywhere from 5 to 10K a month. Just like, I have some friends who own like kind of niche, or own or work in niche marketing agencies in specific verticals, and every now and then they get referrals that don't fit what they do. And occasionally they send it to me just because, like, it's a good, easy fit for me to do. And so that's kind of where I pick up the odd client from that.
How have you like stayed in the know about it all? Because I mean that's like 17 years ago. I'm sure stuff's like way different. So
Uh,
how you stay up to par?
I mean, yeah, it is way different, but like, some things haven't changed as far as like what Google values for SEO, for optimizing your Google My Business page. I mean, the paid ad side of things is a little bit different, but I've always kind of just tried to stay a little bit in the loop on that myself, just doing reading and making sure I know what's changing in the platform. But the core of like how to market and what works hasn't changed. Just the platforms change a little bit. What Google values with their algorithm changes a little bit, but that's easy to figure out. But like, generally speaking, what was working to optimize for local businesses a decade ago pretty much works now. It hasn't changed that much, that drastically.
That's awesome. Yeah, and I guess the competition's so small in those niche markets, like locally, and then the business, so it's
Mm-hmm.
smaller. So I guess like it's not there's a flood of competition. It's made you have to do something crazy to adapt, right?
Right, right. Most like local agencies are either their market, or they are attacking a specific vertical. Like, they'll deal with just lawyers or just dentists, or else it's just like their city. So those are essentially the kind of businesses you compete with. But I think it's, if you're young and you're looking for something to do, I think it's one of the best things to get into. It's pretty easy to learn, and there are plenty of businesses in your area that you can go and find work for. I mean, just go search for, plumbers in your city and see who's not showing up, and go pitch them, and you can find work pretty easily.
Yeah, we don't really hear many people talk about that. I feel like that's not one people talk about online a lot. Usually it's just like Amazon, TikTok, that type of thing. Do you think that's one of the best things people can do if they're young and they're like trying to get into stuff?
I think so. I think it's going to teach you a pretty solid skill set. It's never going to go out of fashion. Businesses rely on the internet for new customers. That's not going to change. And because, in in the Google search results page, there's only that many spots available. You're only going to see a handful of businesses, and there are almost always more than 3 to 5 of any business in your city. And depending on how well optimized they are, it could be pretty easy or it could be hard to get a potential client onto the first page. But you can get a pretty solid monthly retainer. The work isn't overly complicated. You can essentially build out systems and bring on additional employees to handle a bunch of the grunt work, and pick up clients for a steady couple of grand a month, and drive them phone calls, and they'll be pretty happy with the results. It's all about being able to provide and show the value you're providing versus what they're paying you.
Interesting. So if someone wanted to start this business, kind of like what you said, so you Google plumbers, Pennsylvania, that's where I live. Someone doesn't show up, I find them. What am I pitching them like exactly? And then what type of work am I going to be doing to get them results?
Right. So let's say, you're doing like, plumbers, Pittsburgh, right? Kind of a city, or you can even break that down to, some businesses aren't even city based; they're going to be suburb based, right? If you're looking for a dentist or a home cleaner, you might keep that almost hyper local down to your suburb, versus like an entire city, right? Because nobody wants to go drive 40 minutes to go see a dentist. You want to go drive 10 minutes. So you can go there, you can see who's showing up on the first page, who's showing up in the little Google My Business box, which, you just search for a local business and it shows, 3 to 5 businesses near you with the Google map and their details there. That's really what you want to optimize for when we're talking about local businesses, because most people go to that first and foremost, between that and Google Ads, because the actual search results are like over halfway down the page. And so from there, you can see kind of who's showing up. You can click through and you can look at what their profiles look like, how many reviews they have, what kind of photos are set up. You can, with the right tools, you can go see what kind of links are pointing back to that, stuff like that. Gives you an idea of how hard it's going to be to compete with them or to get ranked for that search term. And then you can go out and find people who, you can dive into that and you can go see every plumber that Google knows within your city to show up on the map. But if you're not on the first page, you get like 20% of the results, right? Especially in these kinds of markets, 80% of your search volume is on the first page, and the bulk of that is on the top 3 listings. And so this pitch is, do you want more business from the internet? Do you want more phone calls coming in? These are your competitors. They're getting 80% of the volume in your city, in your suburb, whatever it might be. We can get you onto the first page. We can get you where they are. You can, use, if they don't know what you're talking about, you can take screenshots and point out, this is where you're going to end up. And then the there are plenty of courses, free courses, some paid courses on like how to do, Google My Business optimization. It's not crazy difficult to do. And then you go and you put the work in, you do it, build links, optimize profiles, create a bunch of stuff like that. And, kind of like SEO, it just pushes them up the rankings. And then, within 2 to 3 months, you should be able to get most businesses onto the first page.
And I thought about being a guru for this type of stuff on Twitter. It seems like a hole in the market here.
There's a couple of guys I follow on Twitter that post about it, actually.
Okay. Yeah, because I guess, that's Ty Lopez's thing, right? That's how he became super rich, was this stuff, right? He was the OG SMMA
guy. He did social media marketing more than the Google stuff. Okay. So it was guys pitching Facebook ads when they didn't know how Facebook ads worked.
Yeah.
I remember when he first started doing that, there was a flood of guys say, I just closed a $3,000 client who knows how to set up Facebook ads. It was really funny at the time for me. Because, he kind of taught people how to be sales guys more than operators or people that know how to do the stuff. So which obviously sales is, one of the most important skills you can ever develop. But it kind of helps to know like how to implement what you're selling.
Yeah, I feel like that's the gripe a lot of those service course guys get. It's just like, yeah, they teach these guys how to sell the product and package it up, but it's like the work never gets done for anyone. I know some
Right.
really big ones like that. That like saw one on Twitter. They pitch these guys like these 6-figure deals, like these big companies, and it's like, yeah, but none of the guys ever follow through. They're just kind of scamming these big companies into like wasting money on them.
Mm-hmm.
Yeah, which is kind of like a little scummy. But what you got, John?
Yeah, no, that's where I've never really even heard of this. Like I've heard of like get optimized in Google, but kind of not like how you're explaining it here, which is yeah, I think that's like a real hole in the market, like kind of what Drew was saying, and that it just as business people, like you always want that edge and you always want to like beat out your competition. So I do think that is a good pitch. How do you almost structure it? Are you getting paid up front? Or are you kind of being like, we're gonna do this monthly? Because I feel like you get them optimized and then they're like, yeah, but
Right.
sorry, like we don't
Well,
care.
much like anything, if you don't maintain it, your rankings will inevitably slip. They'll start sliding. So you can structure it. Normally, it's going to involve some website optimization because your website ranking does boost your My Business ranking. So you can start a kind of a setup fee, a higher monthly fee for like the first 6 months when you're doing the bulk of the work, and then like a lower maintenance fee to kind of like maintain the listings and monitor everything, because you're probably going to have to pay for software to track your rankings because you're ranking for multiple keywords, things like that. Also depends on how aggressive they want to be on ranking for a lot of keywords and how many suburbs and things like that. A lot of times it involves creation of unique location pages on the website and a whole bunch of other things that you can continually charge for. So you can make a pretty healthy amount doing this, and you can change what you're charging depending on what kind of industry you're working with, because some have a higher value, higher client value means you can charge more. Your house cleaner obviously isn't willing to pay as much as a dentist or kitchen remodelers might, because just what they get paid per potential lead is very different.
I want to get into the crypto stuff a little bit. I saw on your Twitter you trade. I didn't know that until I just looked at it today. But how much crypto stuff you done? You mentioned a few years back you got into it as well.
Yeah, I was pretty heavy into it for a couple of years. Made and lost small fortunes, and then kind of stepped away from it. It was really bad for my mental health. I think the biggest issue with crypto is if that's the sole way you're making money, every loss hits really, really hard because it's a dig into your cash pool and what you have to operate with, versus if you have additional income streams and it's not as stressful. Like trading in of itself is pretty stressful. Don't let anybody ever tell you otherwise. Um, and so my issue was that was kind of the only way I was making money for a while. And obviously, when you're making money, it's great. But because of the aggressively cyclical nature of cryptocurrencies, like the downturns are nasty, especially if you miss time and exit. Um, so you can see wild swings in your portfolio, um, and you almost feel like you're kind of like trading out of desperation to try and generate more money, and that's when you start making mistakes and losing money, and then you kind of like can go on tilt, which is kind of why I stepped away from it for the most part. I decided it was fucking up my sleep schedule, because like nowadays it's different, but back when I was like aggressively trading like 2014 2015, based on the platforms available, they had weekly futures that would reset at 3 a.m. in the morning on Thursdays, and you want to be there to like watch the move and see, and like that would dictate like the price of Bitcoin would be how that closed. Like it was an insane time to be involved in crypto. People would adjust their sleep schedule so they'd be awake at 3, 4 in the morning for the Japanese Chinese platforms that you could trade on. It wasn't ecosystem we have now, which is much bigger and open for everybody.
Yeah. What's the what did you trade then? Like, were you trading like, or like, what's the difference from then and now? I guess because like now, I don't know if you saw on Twitter, I trade like meme coins every day. So that's obviously you can log in every time. There's kind of always volume. There's not like a dead or a live time because every country can trade. But
Right.
what's the difference between now and then?
Oh, God. I mean, it's night and day. Obviously, the available platforms are different. I don't think anything I traded on back then is still around initially, because Bitfinex only came in after a couple of years. That I believe is still around. I don't know if Poloniex is still around. I traded on that, but all the other ones I traded on at the time just no longer exist as platforms. There wasn't the ability to create a cryptocurrency was very limited to people's technical abilities. There was no click a button, create some piece of garbage on Pump Fund like there is now.
Yep.
Um, so, an edge that people had was being able to read the master wallets from exchanges and see what coins they were going to add and then go and mine them first and get ready to, or go find another shitty platform that has it, buy it, and when it goes to a platform with volume, you can make money. um, we had platforms where if you mistype the price of a cryptocurrency, like let's say it's worth 0.01 and you put a buy at 0.1, it would actually execute at 0.1 and not like the next highest price. So you could buy it for 10 times what it's worth, and it would execute at 10 times what it's worth instead of like clearing up like it is now. Yeah, I mean that was like a fat figure could be very expensive. Same for selling. If you sell that, you've added a zero when you try to sell it, it would execute at that price and not kind of work its way down the order book like it should. Yeah. So that was the risks we took back when we did. Obviously, I mean, this was first cycle I was in was when Bitcoin did its initial run to like 1100. I think that was 2013 or 2014. And then it came back down to sub 200 and then began the long grind up to, was that the run up to 20K? I think we had,
Yeah,
do we
like
have one
18 or
more up?
20. Yeah.
Yeah, well, I think no, we had the 2015 run. I forget what we got up to there, and then it came back down, and then we had the run up to 20K for end of 2017. So that was because that was the third cycle I was in. And then after that, it kind of got weird, at least for me, based on the, to use like the gaming term, like what the current meta is, I guess.
Yep.
Because you had obviously the massive down market after the 20K, where we dropped to, what was the low after that? When 6K fell, we dropped like the low 3000s at the end of 2018. I think it was like, yeah, late 2018, we dropped into the low 3000s, and that was the bottom before the next run up. And, after that, you had the big run of like the farming craze with Ethereum was like the next cycle's kind of big thing. And then a bunch of new exchanges popped up. Sam
Bankman-Fried.
Bankman and
Yeah.
his platform were a big contributor into some of the cryptocurrencies skyrocketing. Like Sol going from $1 to 220, stuff like that, as a native token. So got involved in a little bit of that, and that was what was it? That was the run to 69,000, and then the drop down to like 17, and then the next run up to what we topped out just over 100. Now we're waffling in the 90s, but the every cycle you kind of have your asymmetric bets, right? Like what's going to make you the most money. Um, uh, and for some cycles, it was just buying older ignored coins at rock bottom and waiting for the next bull wave and run it up. I know a guy who basically made tens of millions of dollars just buying stuff and sitting on it for 2 years. Now, none of those coins currently exist, but he bought, sold, and he got out. Next cycle, we had the big, for those that were involved, there was like the big ICO craze, the initial coin offering. Invest in a coin, and I don't know, 3 months from now, you're going to get your tokens, and you can sell it at an inflated value. And a bunch of those were like 100x runners. That was like the big asymmetric bet then. Farming on the next cycle was like one of the bigger asymmetric bets, like sushi and all those things. You could just compound your tokens and wait for an exchange to add the farming tokens, and you make money. Farm ETH, get sushi, and eventually sushi got listed on exchange, run up, crash, run back up. And then right now, this cycle's been all the meme coins, which is like blink and you miss it. It's there's a certain amount of skill involved. I'd say there's arguably more luck than anything involved in catching a right meme coin, compared to actually trading. Catch something as it launches quick enough, and if it runs, you're rich, kind of thing. But 95% of them go to zero. So one of those cases where you're hoping your winners outnumber your losers.
Yeah, 100%. And it's all, I don't know, it's like way more hyper gambling, I guess, where the it can go up and down so fast. It's like way more, and the skill level's so high of the people that are making so much money. Like, I don't know if you've heard too much about like multi-walleting and stuff. So you'll have like one guy control 60% of supply. You can't even see it really on chain unless you just did a ton of research, but it's already ran up by then. They dump that, right. They make like $100,000 on something that only went to 400 grand, which is just like ridiculous.
Well, that's never, I mean, that was around back in the early days as well. Like, just not letting anybody know how much you controlled of a coin. That's, old school tactic right there. But I think really it's just the speed of how things are moving right now. I think I'd argue that, to me, pump funds a net negative on the whole ecosystem, because I think it sucks out more money than it brings back in. It's an aggressive, it's hyper aggressive PvP in cryptocurrency. Obviously, you're always trading against other people, but at least when you're kind of trading off technical analysis and charts, it's almost always smaller fish versus the whales kind of thing. And you can make some money, and most of you can make money, and nobody's going to get like really badly burned holding a bag. But when things are like one and done in 12 hours, in 2 days, unless you are glued to a screen and hyper focused, it's really hard to play in that pool.
Yeah, I agree. What's the most you ever made on one back in like when you were trading a lot? Did you ever hit like a massive win?
Like multiple of like
what's the biggest win? I guess I don't know if you want to say the monetary terms, so maybe X's would be better, right?
Yeah, I mean, I think I had a few like 60, 70 X's.
Okay. And with decent size in, or not a lot of size?
Okay size, like nothing massive, because it's never the ones you go massive and then end up going, and you're like, that looks okay, I'm going to put some in it. We'll see if it happens. You lack the conviction, and then you kind of forget about it. I think the hardest thing is, if you do put in a large amount of money, holding on to it as it multiplies becomes incredibly tough, especially depending on like how the rest of the market's going. Like if nothing's really been going 20 or 30x, and all of a sudden your coin does, that's like the most multiplier you've seen. You kind of want to pull some out, because nobody else has done that yet. Everybody says, oh, if I bought Bitcoin at $100, I would have held till today. Like, fuck, you would have. Like, nobody would have. Like, a few dieharders that truly believed in the tech did. The rest of you you'd have taken a 20x and walked away and thought you were a fucking genius, like straight up. So I think the hardest thing is when you have a position with size and it does like really take off, like the urge just to close out. If you put in 20K in a coin and it's up 20x. Like, yeah, I mean, all right, it runs to 100x, but you're up 20x on 20K. Like, come on, like for most of us, that's like almost life-changing money. Like, you can do a lot with that. So it's like, how much do I sell? Do I sell all of it? Because some things get there, and then it's stairs up, elevator down. Like when it hits the top, it's gonna cut in half almost immediately, like within a day. So you can like shave off your position a little bit, but like how much of the bag do you want to be left holding? Because like I don't know which one's worse. Like what's worse, like selling too early or holding the bag too long? Like which one's gonna make you feel more like what's gonna be your biggest amount of regret? Um, and it's always one thing I always struggled with to a certain degree was that like exiting properly. I know guys that were really good at it. Like that was like their edge. They knew exactly when to exit somehow, some way. The entries might not have been great, but their exits are always spot on. And then there are guys that could enter a coin at a great position, but they just lacked the conviction to hold it all the way to the top, and so they left a lot of money on the table.
That's me. Yeah, that's why
It's
I end up fumbling like loads of money.
it's hard, man. It's hard. I think it's one of those things you kind of get better at with time. To a certain things, things with enough volume and history, you can use technical analysis, you can figure out levels and stuff like that. But for some of like the quick ones or things that go exponential, it's kind of hard to predict where it stops. I don't know. TA is only good to a point. I don't know how you're going to TA something that's already up 30x and how much more is it going to go up. It's infuriating too. There are guys that you got in like at the bottom, and there are people that'll get in at 20x and they'll still make more than you because they go in with bigger size and they're willing to hold longer than you. All sorts of fun things like that. So crypto's always been a fun hobby of mine. Made some good money, paid for my house, my truck, a couple of family vacations, a few degenerate Vegas trips. But like I said, I made a lot of money, lost a lot of money, decided it wasn't great for my mental health, my physical health, because the sleep cycles and trying to be active 24/7 for these things with like alarms going off in the middle of the night for price changes and things like that just got to me.
Yeah, I think I'm going through that a bit right now. I'll ask for some advice on that, but I'll let John get a few questions in because usually we're having the UGC guys on. I'm always asking them stuff. So, John, do you have any quick crypto questions? Because now you got him on here. He knows his shit more than me. So this will be good.
Yeah, no, I mean, Drew's always talking to me on Twitter or here. I like hardly understand what he's doing, but it sounds like super interesting. So for you, I guess one of my things has, like you said, it goes 60x or 20x, like kind of what's going through your mind? Because I always ask Drew this and he doesn't really have an answer. It's like, why do you buy? Like, what's hesitant to like not keep you in or to leave?
Nowadays it almost comes down to if you're riding a position, it's social media chatter is a big indicator of what's happening. If everybody's hyping up a coin, you're probably late to buy it. And it's probably like, and if everybody's starting to posting their like unrealized profits, probably a good time to exit it. It is kind of, there are two of the rules that I've kind of stuck by over the years that have served me pretty well. It's kind of just like general guidelines. I've never regretted exiting a coin when I've seen like half a dozen people post, here's my unrealized profit. Can't wait to run this up X amount. I'm like, no, we're out. It's time to leave. Even if it goes like, you might not catch the exact top, but it's good chance it's close enough because people only do that when they're flexing some serious numbers. I think, was it beginning of last year or year before, before the big run up, somebody had like bought 16,000, like opened up a $16,000 position on Bonk, on one of the exchanges, and he had ran that up to 9 million. And he was
Bond guy. Is that the Bond guy?
he was posting his unrealized profits and loss, and it was like exit, like you took 16K to 9 mil, it's cash out. And the guy's like, no man, we're gonna run this up. I think it dropped to like, I think he held, I don't know if he sold any, but he took like a 75% haircut. And that was close. That was within, I think when he posted that, they were within 15% of the top. Like I said, it's a great like top signal in general for like coins that have like a lot of hype around them, and when everybody's getting involved in them. The other thing is like in a lot of cases, coins almost always run further than you expect and end up with way more volume than you expect. Um, it's kind of hard to fathom how some coins can do like $1 billion worth of volume in a day. But after a while, you kind of get used to it and you can see it. So, yeah, I mean, say exiting and entering are for like meme coins and things that are like pumping crazy are a bit of an art form. For a lot of other stuff that aren't as easily manipulated, let's say, it's technical analysis is a much better bet for how to trade those. But obviously, those aren't like crazy asymmetrical bets. You understand, I'm going to enter here and I'm going to exit here. I'm not looking for a crazy 50x on Bitcoin or Ethereum. Especially if you're like using leverage to enter positions, you've got set levels where you're cutting your losses or you're exiting that position.
Have you thought about trading meme coins any on these new platforms?
I did a little bit of it. Like I bought Trump coin at 16 and sold it at 60 because I was like, yeah, that's good. And then I saw it go up, and I was like, all right, almost a 4x, it's fine. And that was like a reasonable win. So I'd play around with it every now and then. Obviously, I think I kind of stepped. Like I saw crazy things were getting on Pump Fund with coin launches, and I just kind of was like, I'm just gonna wait this out for a while and see what happens. And obviously, they kind of got obliterated and no volume and no coins pumping like crazy. People have been kind of quiet on that side of things. But I'll play the majors a little bit. Taking positions on things like Sol and Bitcoin. Been watching those charts, and had a entry on Bitcoin in the low 80s that played out. I closed a little bit at 94 the other day. I'm still holding on to like half to see if it'll go to 100 or not. So I still like to trade those because I still have like okay technical analysis skills, and I'm more comfortable with that side of things now. And kind of like I think what I was doing back when I was trading a lot in my heyday is a very different skill set, and that what we did doesn't exist anymore. So you can't do that.
Yeah. What kind of recommendations do you have? Like, personally, I'm probably trading like 10 hours a day, man, like 8 to 10 hours a day on these things. And I've noticed what you said, like I can see you're a pretty jacked dude too. I used to be more jacked, going to the gym, that type of stuff. But dude, I haven't been to the gym in much. But like in my head, I'm like, if I get good enough at this, and I am a profitable, I'm up like 20K overall doing this. And that's only in the last like 2 months I've like found the decent edge with this stuff. But I'm just like, man, am I sacrificing a lot of health and stuff like that? But also, I do understand I've fumbled, over $40 million since I've started. So I'm like, all I need to do is hit like a fraction of one of these things. Then, like you said, it's like life-changing money, at least for a bit. So,
right.
And my mental health, I don't think is deteriorating too bad. I'm a pretty happy guy overall, but I can see the physical stuff. I'm just like, dude, I'm getting way lazier with things because I just want to watch the charts all the time because
right.
you miss one opportunity. Like yesterday, I trade all day. I get off and a $55 million run response on Pump Fund. And I'm just like, shit, man, I like missed that for not being on all day.
That's the issue with the way that market works. You're not going to get away from that at all. If you wanted to be less glued to the charts, you'd kind of have to start delving into technical analysis and learning that side of trading. which doesn't apply to meme coins that have like a 1 month life. 1 month, if they're lucky, they last a month.
Yeah,
Like a 1 day life cycle, right? Your current strategy um, is just kind of hoping you're right time, right place. Versus, if you can do technical analysis, you can look at a chart. It's not predictive, right? You're not trying to predict what it does. You're trying to play what like the what could happens. If Bitcoin starts going down, these are the levels it could reach. If it breaks through this level, it's going to go to this level. And this is where I start entering my position, and then you buy some. People were looking at the low 80s, high 70s when it started coming down, and there are plenty of people who said it wasn't going to come down. But I know guys that had conviction it was going to go there, and they entered there, and compared to pump fund where you're getting multiples, it's only up less than 20%. But if you have the capital to do that, or you're playing with leverage, which is obviously a dangerous game to play if you're new to trading, because that's how you blow yourself up real fast. You can make money doing that, and it doesn't require you to be glued to the charts all day, every day. I think it's dangerous because obviously it's addictive, and if as soon as you miss one, you're like, all right, now I got to spend more time on the computer. And I think it doesn't give you any sort of skill set that could make it last in trading, because after this cycle, there's a good chance that the pump fund ecosystem's no longer going to be relevant. And so if you made your money there, like, you better hope you made the bag and you don't have to go back to it. Versus if you learned how to be an actual trader, there are more markets than crypto that you can trade in, especially if you're slow and consistent and you've built up, pool of funds to work with. You can start entering stock markets, forex, stuff like that, or you can learn how to make money when cryptocurrencies go down, because you can take short positions and stuff like that. So you can play it both ways. Versus you know with catching runners, you can only play an upcycle, you can only play a bull market, and bull markets are almost always significantly shorter than bear markets. Your bear markets only run 3 times as long. I think Bitcoin has been pretty good with like 4-year cycles, right? But only 1 year of those is bull market, and only a handful of months are like ridiculous bull market. Okay, the other 3 years are bear markets. And if you don't know how to trade a coin as it goes down, you're essentially saying, I can't make money for 3 out of 4 years. So you either make a really, really big bag during that 1 year, or you learn like an evergreen skill set.
Yeah, that's good stuff. What you got, John?
To switch it up, I'm a little curious. What are your thoughts on Walmart? We've had a bunch of people on here. I feel like the first batch of people we had, they were very bullish on it. The second batch, starting to get a little bit more competitive. There's more softwares coming. Like, they're kind of more wishy-washy on it. What's kind of been your experience?
I got a mixed opinion on it. I think there is plenty of opportunity there for smart sellers. Right now, it is about a third of the amount of sales I do on Amazon, and that's dictated by what I sell there. I know a couple of guys that are doing 6 figures a month on Walmart. So there is, I think the biggest complaint is people saying there's not enough volume. I think there is in the right categories, the right items. Overall volume certainly doesn't match Amazon. If you take 2 identical products, you're going to do significantly more volume on Amazon than you are on Walmart. But I think in the right categories, right products, there is plenty of volume to be had. I've caught a couple of those products myself. You can do very well, sell several hundred units a month, no problem, fairly easily on Walmart. I think the issue with Walmart is, as Amazon purges idiot sellers, they are going to Walmart. and taking their idiot selling habits with them, and that's going to make Walmart a shit show. Luckily, we don't have as having the tools is a good thing and a bad thing for Walmart, right? Tools allow for ease of entry, which is why it's so easy to get started on Amazon. Just some really good tools. You don't need to be a rocket scientist to get started. You have tools that predict sales, give you estimates. You can look at, everything you need to know. And if you have half a brain, you can pretty much figure it out between a keep a chart and a list of sellers and their stock numbers. That doesn't really exist for Walmart. And so I think it keeps a certain type of person away from selling on Walmart. The lack of repricers is a good thing on Walmart. You don't have the people undercutting each other nonstop. There's like one good repricer and it costs $200 a month, which most people don't want to pay unless you're doing decent volume. But if you're doing like, 4 figures, low 5 figures, you probably don't have the margins to afford that, especially if you're also selling on Amazon and you're paying for all those tools. That's probably going to change because it's there. I'm seeing people offering courses, Walmart challenge, that's all popping up. So we are going to see a flood of sellers come into that. It's the new hot thing. I think it's appealing to a lot of people because of what's been happening on Amazon. But I don't think it is, the promised land that some people have made it out to be, this grass is greener kind of thing. It's good. There's plenty of things that you can sell there that aren't available on Amazon. And there are plenty of things that do more volume on Walmart than Amazon, weirdly enough. But if you're trying to sell the exact same stuff you sell on Amazon, it's going to be hard. And if you try and sell the exact same stuff everybody else is selling, you're going to run into issues. You got to go in there and you got to kind of find your edge and build your moats, much like on Amazon, and go from there. Kind of figure out what is hard to do on Walmart that everybody else can't do, and then go do it.
You mentioned the challenges and the courses coming out and stuff. Do you think that that'll end up being as big of a deal? Like people making, I'm sure like a lot of the gurus and stuff making like printing just so much money off the Amazon stuff. Do you think that is a good opportunity for the gurus over there? You think they're going to make that much?
I don't think they'll make as much as they did back in I think the heyday of Amazon courses was like 2 or 3 years ago, right? Yeah, I'd probably say like the peak of Amazon course mania was about 2.5 years ago. As people were able to flex all their post-COVID profits and orange bars. It's just gotten nothing but harder since then. I think there is probably decent demand for it. I don't think it's quite as high as Amazon was, because I think people have soured a little bit on reselling as a whole. So I think the core sales will probably do some okay numbers. I don't think they're going to be printing money hand over fist like they were a couple of years ago with the Amazon stuff. But I think it will bring in a bunch of people into the ecosystem. We'll see how long they last. It is certainly the margins are better by quite a bit on Walmart, which I think is a good and a bad thing. Good thing because you make more money. Bad thing because it gives dumb people a lot more room to be dumb. Because like a bad seller on Walmart is still making better margins than a good seller on Amazon, like depending on what you're selling. So whereas with Amazon, you had to be, if you weren't like really in control with your numbers and understood exactly what was happening, you could get to the end of the year and realize that you were working for minimum wage. That's a lot harder to do on Walmart because of the significantly reduced amount of fees and stuff that they have. Like my Walmart margins are, I think, their stuff's delayed a little bit, but March was like 26% margins. Which is, yeah, I mean, you've done Amazon. That's insane. So you're never gonna like
double.
Nothing on Amazon could ever do that. Like maybe if you only stole Stanleys during the Stanley craze, you could reach that kind of thing. But that's a pretty like mid-20s is a pretty consistent margin for me on Walmart, compared to like mid to low teens on Amazon. So when you have those kinds of margins, people get into bad habits and people undercut and people lowball and people just do things that you would otherwise be punished for on more sophisticated platforms. And so I'm curious to see how it plays out. It's not going to really change what I do personally for Walmart. I'm just kind of keeping an eye on what everybody's pushing everybody else to do. I think you had, I was listening to the interview you guys had with Steven, who he says basically like, what's everybody else doing? Okay, I'm not going to go do that. And that's kind of my take on Walmart. Like, what are they pushing people to do? Where are they pushing them to source? How are they pushing them to do stuff? All right, that tells me exactly where the flood of um, new sellers are going to go, and I'm just going to find something else to do on Walmart because there's plenty of things to sell. So, no shortage of opportunities there. Just make sure you're not competing with hundreds of other people who don't really know what they're doing.
Yeah. So you're pretty bullish, at least short term on it. Are you going to keep expanding?
Yeah, Walmart seems much more open to listening to sellers and working on stuff. I mean, Yoda from Three Cults says, they're working with them to like rebuild their API from the ground up because Walmart was never built with third-party sellers in mind. They just ended up having to do it to compete with Amazon. So they seem very open to working with third-party sellers. I think they believe it's the only way they're really going to be able to compete with Amazon in the long term. And so the more they can do to help sellers out and the more Amazon does to piss sellers off, the better it is for Walmart in the long term. So on that side of things, excited to see what they do over the next year, especially after, getting beaten down by Amazon over the past year with all the changes they made, which are, universally very unfriendly to sellers. Um, Walmart's changes seem to be much more beneficial to what we're doing. So, that side of things I'm pretty bullish on. I think that they understand they have to compete with Amazon in the long term. They can't lose any more market share than they already have. They're playing catch up. Their platform's been described to me as what Amazon was like in 2016, 2017, as to how like immature it is compared to what we have today.
Well, you seem to have a good understanding of this stuff. I've asked this to multiple people. I don't know if I have got a great answer for it yet, but my problem with the whole Walmart thing is they can do all this stuff for sellers and they can increase the supply and the satisfaction of sellers. But how do they increase volume? We have one guy say that he thinks they could take fees from sellers and pump it into Google or like Google search and then push it above Amazon, which I thought was interesting. But my problem is always like, well, there's just more supply coming of sellers, but there's no extra volume on the Walmart buy side. But you're probably more educated on that than me. So what do you think about that?
Right. Yeah. So you're basically talking about the buyer demand. That's kind of up like that is kind of the $1 million question, right? Bringing in more sellers doesn't do anything if Amazon always has more volume. So they really have two options: is on essential things is ranking better for items in Google, right? And the issue with that is vast majority of people when they want to buy something, they default to Amazon, not even Google, right? So you're fighting against user behavior in that regard. Because of Walmart's lower fees, right? They can essentially be lower priced for a lot of the same items, and sellers will make more money. So you can compete with Amazon. You can compete with your price comparison shopper pretty aggressively, right? A $20 item on Walmart versus a $20 item on Amazon. I'm probably gonna make $2 to $3 more on Walmart after all fees, right? And that's pretty healthy margin at the end of the day, because of the way things are set up. That's if you're doing Walmart fulfilled, because their fulfillment fees are ridiculously low compared to shipping it out yourself. But you don't have like the crazy excess inbound fees the shipping fees, all those fun things that add costs to what you're selling. So the volume issue is a question I don't have a good answer to, and it's why I'm not looking to go all in on Walmart. Walmart is always going to supplement what I do on Amazon. I'm looking kind of 75-25, maybe 66-33, kind of a split long term between the two, with the understanding that it's okay doing lower volume because of the higher margins, and just trying to be much more strategic with what I sell on Walmart, because I don't want to get caught. They do have some pretty aggressive long-term storage fees. I think even worse than Amazon's. So because of that, it's just I'm just trying to be smarter with what I sell on Walmart. And the thing is, like, I've sold products that are on both platforms, and I've done much more volume on Walmart, weirdly enough. And I don't know why that is. Kind of looked at it, both items pop up when you search for it on Google. Sometimes Amazon is the cheaper one, but I still sell more units on Walmart. So I only really aggressively started selling Walmart kind of back in Q4 of last year. I kind of dabbled in it. I had an account from Christmas 2023. I opened up an account to sell some stuff on there, and then kind of used it kind of to offload stuff I couldn't sell on Amazon for most of last year. And then going into Q4, I decided to make a concerted effort to see what I could move there, and sold a decent amount. Found some good arbitrage opportunities, for items that weren't on Amazon that were moving high volume. And so this year, pushing more volume there. But yeah, to me, it's always going to be supplementary. I'm never gonna try and overtake Amazon. I still think Amazon is much easier to do high volume on Amazon, without a doubt.
Interesting.
That's good, John.
I guess you have a lot of insights on markets and ups and downs and stuff like that. I guess in regards to Amazon, do you think they're just becoming less reliant on third-party sellers? Kind of want to do things themselves? Like, why would you think they're kind of pushing all the stuff they're pushing at this point?
That is a really good question, and I want to say they're trying to improve the quality of what's being sold on the platform. But I say that, and I can go to half a dozen listings, and I can find guys with an average of 2 stars and nothing but negative reviews, right? And so like you're doing all these terrible things that make our lives more difficult, with like the regatings on brands and stuff like that, to limit counterfeit goods or stolen goods. I think that is a big part of a lot of it, is retail theft. Amazon is turned into, post-COVID, Amazon was the place you fenced stolen retail goods. I think late last year there was a story of a woman who had a Sephora theft ring operating out of 3 states, and over 2 years she had sold $7 million worth of inventory on Amazon.
Wow, I never saw that.
Yeah, she was basically just paying people to go steal stuff below like what gets you arrested, and then send it to Amazon, sell on Amazon, because doesn't matter, your cost of goods is zero, so it's pure profit outside of what you're paying your little thieves for. And yeah, and I think there's more of that than we realize on Amazon, and I think Amazon is probably getting pressure from brands and the government to clamp down on that. I'm not sure what kind of liability laws apply to them or not for selling stolen goods. Obviously, we can't do it because that's illegal for us to do. I don't know what Amazon's liability, being the marketplace for that, is. So I think a bunch of that is in place. There's obviously big issue with, I think, in the cosmetics world, with counterfeit goods from China and stuff like that. Lots of so-called wholesalers are selling sketchy goods. Any cosmetic wholesaler who's giving you an ASIN with the product, half the time that stuff's fake. So I think that's got a lot to do with it as well. But I've been hearing the stories of one-party sellers on Amazon, which are like Amazon partner sellers, are getting tired of dealing with Amazon. So like I'm not quite sure exactly what's going on. As I said, I think they're trying to clean it up a little bit. I think they're trying to control their whole ecosystem more with the push to AWD and things like that. Still not quite sure what the end game is completely, because I can't foresee them completely removing third-party sellers, right? Because the available inventory would tank. There are so many products that are propped up by third-party sellers, and not just like larger kind of wholesaler brand partners like your RA OA resellers, like prop up like a significant number of listings. So you take them out, and your product count is going to drop precariously. Because at the end of the day, it doesn't matter who's selling it, as long as Amazon's selling it, they're making money, right? But their concern is they got to make sure they're selling quality goods that are packaged right, that are authentic, and that lead to a good customer experience. And your issue is with a lot of smaller guys that don't really care what a product looks like. They just, not bagging it, not prepping it right, all those things leads to a bad customer experience. So I can see why they would try and reduce those. Because obviously the larger guys have better systems and platforms and things going on because they're operating at scale. They have to. But yeah, it's weird, that, like I said, you can go out there, you can find guys selling absolute trash that's fake or doesn't arrive, all these things, and they're still there happily selling along for multiple years versus, guys that sell what I got gated in Lego last year after selling over $250,000 worth last year. So like, some shit doesn't make any sense to me.
Yeah. I'm happy you said that because I've like voiced those exact same opinions. I think it's like clear that that's what's happening. Maybe they just haven't caught up to the people that are blatantly fake. But I feel like all the government and the brand pushback. I hate on Twitter when people are like, "Well, we don't know the answers to what Amazon's doing." It's like, well, you don't have to know the answers, but the educated guess that you make. I mean, I came to the exact same conclusion. It's not that hard to see that. If you can't,
Right.
then I just feel like you're an idiot. I don't know. That seems obvious that they're doing that. And
Mm-hmm.
then from there on, it's like, well, then why does these things? It's just, I think it's a lot of nuance in it, but that seems to be what they're pushing for. And then I agree with you too. It's not like they're going to get rid of them completely. That's a huge revenue source overall. How many people might go on there to get one specific thing, and then you add a bunch of other stuff to cart. So you can't even kill your loss leaders. That would just kill a lot of stuff. So I agree with you, but I don't know. It's not clear what I guess will happen in the future.
Yeah. I mean, I'm not quite sure what the end game is. I think we just have to wait it out and see. I think, if you're doing things by the book and your business is running well, keep at it. Be ready to, I think that the nice thing about being like, if you're doing OA, RA reselling, is you have the flexibility to pivot pretty quickly, compared to like the larger wholesaler guys who, are generally tied to set suppliers, set stuff that they know that they have to sell consistently. We can move pretty quickly and jump onto things as needed. So I think you have to like stay nimble right now, and don't get too attached to any particular brand or product, and just be ready to roll with the punches.
Well, dude, I wish we could do this for like 30, 40 minutes. We're going to have you on again, but I unfortunately forgot we had a fucking pod today. So I've got to run here in a bit.
No
But
worries.
any last things, John, you got to say, or any questions you have for us?
No, man. I mean, I'm good from my side. I've been enjoying. Like, I listen to you guys when I do cardio at the gym to try and get caught up.
Oh,
Because,
sweet.
like, yeah, I can do basically. I got like 30-minute sessions a week, so I get through like an episode a week. I'm a little behind right now, but it's fun. I've been enjoying like the broad perspective of guys. Some guys absolutely crushing it. Yeah, I've been liking the stuff on like the TikTok shop and UGC stuff, because that's kind of my side quest for May is going to be TikTok shop. I'm going to kind of try and delve into that just to see how it is. Obviously I think, with what's going on with Amazon, it's always good to have additional revenue streams, and maybe it's something fun and I enjoy it. I know a number of sellers who basically gave up selling on Amazon and went full time with that. So there's got to be something there. Gonna play around with that and see how it goes.
Yeah. One more question, I guess. What's your favorite episode been so far? Out of the ones you watched.
Favorite episode? When you had God, why am I drawing a blank on his name?
What's he do?
Oh, Amazon Lit.
Oh, I was on that.
Cool.
Interesting.
I just like him. He's like there are a lot of like questionable people in the space who aren't authentic, and I've met him a bunch of times, and he's one of like the realest human beings out there, and he actually has like a huge passion for this and for education and for helping people. Like, he is like one of the realest guys you'll ever meet if you meet him in person. Like, truly, like, his story is awesome. Him as a person is great. Like, he is like just an all around stand up guy.
Awesome.
Agreed.
That's good. All right. Anything else, John?
No. Where can people find you?
Pretty much on X at Rogue Darren, ROGUEDARREN. I don't really talk about Amazon a ton. I just ramble and share my thoughts because like I'm kind of like Drew and I hate the idea of networking like with the passion. So like I don't really care to do it. So I just talk about random stuff and occasionally mention Amazon.
Heard that, dude. Networking is gay. I'm just kidding. If you like to network, you can network.
All
Go
right,
to
guys,
Miami
go
Selling
check
Company.
him out. Thanks for being here. Like, subscribe, and we'll see you guys in the next episode.
Peace.
Peace.
Cheers.